Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading. And, I'm sitting down here in amazing Los Angeles. I'm looking out at my hotel window right now, and I'm seeing 90-degree weather, palm trees, and swimming pools, and, absolutely awesome. In a fantastic mood. Had a great event so far here for Rich Dad Education, just teaching a bunch of wonderful traders. And I decided, it's just time to do the market recap video. So I know it's a little late today, but that's why it is a little late today. So I want to look at the marketplace today, and obviously broad-based market rally, really kind of led by the financials, which have really been hit hard lately. So if we're looking at the financial sector here, let's go to a day chart there. And as you can see, the marketplace in the XLF, which is the financial sector, really has not been hit that hard, but it really hasn't been doing much for the better part of the last few months. So, I mean, we're tracking really kind of all the way over into this range. So really from November until now, so we're talking about about 4 months now, 5 months maybe, it's just been really kind of tracking sideways. And as the market's been going up a little bit, it really has not responded that way. So in the financial sector today, just had an absolutely wonderful day in the marketplace. As you can see, it started strong and it leveled off after the very beginning of the market, but then it kind of picked up towards the end. And because it kind of picked up towards the end with a little bit of volume behind it in the financial sector, that more than likely will continue coming in till tomorrow as well. So it kind of was led by the financial sector, but even on the ES contract, which tracks the S&P 500, the futures contract, what we're looking at here is you have a retracement that comes back down into support. You have your narrow body candle there, upward movement in price, and so that it looks like this should continue to go up. Now, this is a news-driven market more than it is a technical-driven market, but if you're looking at pure technical analysis here, this is a technical pattern that should continue to drive, at the very minimum, back up into resistance zones. Again, this is not necessarily a technical driven market, but if you're looking at the technical analysis behind it, upward movement in price after it kind of stalls out at the 2040 mark, which is a Fibonacci retracement level into the 61% on the Fibonacci from this movement, that's a buying opportunity. You can't argue with it. And so when we're looking at stocks like Apple and Google and whatnot, here we are looking at Apple. I did a video on Apple just the other day. This might be an opportunity to scale into a position. Now, ultimately, my call on Apple was to get into the 120 level, and it got within 1/2 ATR of that level all the way down to 121.35, and that's kind of the low point of today before it responded back up and basically closed out the loss that it had yesterday. That's a buying opportunity for Apple as well. I like that buying opportunity for Apple, but at the same time, it's something a little aggressive. So you might not want to, if you were planning on buying 4 contracts, maybe you only buy 2 contracts at this point and buy another 2 contracts when it hits into the 120 or confirms stronger as it goes back up above 125. I think that's a good game plan, and that's kind of how I approached Apple. Looking at Google here, it's certainly not the trend that we've seen in other things. It's really kind of been tracking for quite some time now. But if you're just looking at this upward movement in prices here, you got about a nice little support level there at the old resistance zone right here at 555. Upward movement in price does have some confirmation. I was doing some targeting analysis on it earlier today. 606 is probably the target. If you want to be a little more conservative, 600 in that capacity could be the target. So I kind of like that one as well, with the stop loss right around 550 to 545 in that range. And so when the market comes into a support level, a lot of the stocks that we like also come into a support level as well. And so this could be a buying contract in the ES contract. When you look at some of the other contracts out there, here's the gold futures contract. It's just been absolutely beat up, but I do like a buying opportunity here. As you can see, you do have a support level, major support level at 1150. It's currently at that level. You can put a stop loss right underneath 1150 in the gold contract. So that might be a buying opportunity right there as well. And to protect to the downside to a certain extent. If you're looking at silver, let's look at not Salt Lake City, SLC. Let's look at SLV. SLV a little weaker than gold is. It's really kind of fighting for that $15 mark, and I have naked puts at $15, and it's currently at $14.92. Now, I would rather not be put the shares at $15. I'd rather just purely cash flow on the theta, but I'm not going to manage that too aggressively, just given the fact that I don't mind having the shares put to me at 15. I wouldn't mind owning silver at 15 here. So I do have naked puts on silver at 15. Look for that to, it's really overextended to the downside. Kind of looking at the history here of the runs. Doesn't really, I mean, that's probably the most similar run, and it moved down about $3. So this current run's moving from right around $17.75 down to $15. You know, you can probably see a tiny bit more downward movement, but it's really overextended right now, and more than likely needs to jump back up in price. So we'll see if I'm put those put options at 15 or not. But like I said, even if I am, I don't care that much. Looking at the crude oil marketplace, crude oil, my daughter continues to be right. And by the way, she's 5 years old. Remember last week when my daughter said the market's going to come down? It went down 5%. Remember what she said about crude? It went down again. And so we're down. This is back when my daughter gave that assessment back in this range, and we're down to about $47 right now. You're down a good 6% from when my daughter made her call on crude going down. Hopefully you listen to the advice of a 5-year-old financial wizard. Yes, you don't need Wall Street. You need my baby Katira, who's an amazing technician and just going to get better and better and better out there. Where do I see this going? You know what? It's so hard to predict short-term analysis on crude. It's very news-driven. Longer-term, fundamentally speaking, I am bearish on crude. We did get the crude oil contracts supply today, and U.S. market supply is not at its capacity, but more supply came out of the market more supply came out into the market today, drove crude prices a little bit lower, and I certainly wouldn't be shocked to see it come down into the 43.50 back into this range, ultimately breaking $40. And until we start seeing the underlying fundamentals of the dollar index changing, then we just got to trade with what we see coming into the dollar index now. Dollar index, oh my goodness, oh my wow, if I've ever been right on something, I've been right on the dollar, which hit the $100 mark, and that's exactly what we thought would happen. Now, in the short term, I see a dollar at the $100 mark is the dollar at a $100 mark. Say that 10 times fast. I see it kind of just struggling just a little bit. Not a lot, not a lot. I certainly don't see the trend of the dollar changing. Nothing has changed fundamentally of that. The emerging markets are still struggling. The U.S. dollar is seen as a safe haven investment. And while their recessions happen, we're going to go up. While they start printing money, we're out of quantitative easing. Dollar's going to go up. That's not going to change. And as the dollar continues to gain its strength, I continue to see the dollar as the primary driver of the marketplace, and especially dollar up, crude down, and more than likely silver and gold down as well. However, in the very short term, I would not be surprised if that dollar mark right there that it's hit the last 2 days kind of comes back down just a little bit into another buying opportunity, which means things we love trading like the euro US dollar should retrace back up a little bit, ladies and gentlemen. And I did pull off my trade yesterday on this in terms I got kicked out at the 105. Remember, my first target on the euro dollar was 105, ultimately getting down into a dollar. So I did close out of the trade at the 105 mark. Actually, I got stopped out. I trailed down my stop loss, got stopped out. It was 105 something. I can't remember exactly what it was. Tough to say exactly where it's going to go here. It's not at its total average. I mean, if you look at the total average, it can run down about 12, 13 cents in one run. and right now we're only down about 10 cents in the run. So it certainly can move down a little bit more in terms of the valuation. But for those of you who are short euro, you might want to start locking in profit and then re-enter as it continues going back down. That is the market recap report for Thursday. And my name is Matt Justice. Check us out over there at tackletrading.com. Check out Gino's options report, my currency report, called the Forex report, and everything else we're doing over there. Change your lives. Get in the game, make some money, and then go change somebody else's life as well. Once again, Matt Justice, tackletrading.com.